When based on market cap, Tesla is the largest car manufacturer in the world. Back in November of 2021, it reached a peak valuation of over $1.2 trillion. In the years since, Tesla's stock price has decreased by more than 55% and brought down its total market cap below $600 billion. Tesla also used to hold the title of world's largest electric vehicle seller, but that came to an end in the last quarter of 2023 when manufacturer BYD began outselling them. Tesla was founded in 2003 by engineers Martin Eberhard and Mark Tarpenning. Their goal was to create a car manufacturer that is also a technology company. Elon Musk joined the company in 2004 as largest shareholder and became the CEO by 2008. Tesla faced early challenges and almost went bankrupt multiple times. But through Musk's leadership, they were able to persevere and achieve a peak market share of 78% of the US electrical vehicle market in 2018. While being credited for the rise of Tesla, Musk's eccentric personality is also being partially blamed for the recent downfall in Tesla's dominance over the global EV market. Rising competition and lack of consumer and investor trust has made Tesla's US EV market share drop to around 56%, and it's expected to keep dropping. How was Tesla able to pave the way for EV manufacturers and reach the top of the industry, only to begin losing market share as soon as mainstream adoption began? In this episode of What's Going On Here, we're going to look into the factors that led to the dominant rise of Tesla and how many of these same factors eventually led its valuation and market share to plummet. Despite what people might think, Tesla's success didn't happen quickly. Tesla was founded in 2003, but didn't sell its first car, the Tesla Roadster, until 2008. At this point, the company was losing money and Musk contributed tens of millions of his own money to keep the lights on. In December of that same year, the company was on the brink of bankruptcy and unable to cover the next payroll. Musk was able to secure $40 million in financing to keep the company afloat. This was followed by a $50 million investment for 10% of Tesla by Daimler AG, the makers of Mercedes-Benz. Tesla's growth was propelled by Elon's vision and drive for innovation and disruption. The 2008 Tesla Roadster was the first highway-legal, mass-produced, all-electric lithium-ion battery car, and it was the first production car to travel more than 244 miles in one charge. Its 125 mile/hour top speed and 3.9 second 0 to 60 showed that EVs were viable sports cars. By the end of 2012, Tesla had sold more than 2,400 Roadsters. Tesla held an initial public offering for its stock in 2010 and was able to raise $226 million. Since the IPO, the stock has been very volatile, but nonetheless has grown unbelievably quickly. To this date, Tesla has returned close to 13,000% over 14 years. This unprecedented growth has led Tesla to become one of the most shorted stocks ever. The growth in stock price was driven by extreme goals set by Musk, which often fell short, but were enough to earn Tesla a cult-like following whenever it did deliver. In 2014, it planned to sell 40,000 cars, but fell short and only sold around 31,000. This was eclipsed the following year when they sold close to 50,000 cars. This number has continued growing and growing to the point that Tesla sold 1.8 million cars worldwide in 2023. Tesla is able to sell so many cars due to the persona they've created for themselves and their revolutionary direct-to-consumer sales model. Unlike most car brands, Teslas are not sold at traditional car dealerships, but rather are sold directly online. This makes the car buying process much easier, which allowed millions of people to customize and order Teslas from the comfort of their home. For many years, Tesla didn't have a serious competitor for EV sales. Their share of the US EV market steadily rose for years without any roadblocks. As legacy automakers begun to invest more into EVs and smaller competitors have attempted to make a name for themselves, the comfy margin Tesla once had is getting thinner and thinner. The speed at which Tesla has grown has led to delays and challenges in scaling. In the early 2020s, it was common to see a multiple months long delivery time when ordering a new Model 3. Also, the quantity produced has come at serious cost to quality. There are plenty of videos online detailing doors that don't work in the cold, misaligned doors and trunks, and peeling steering wheels. Elon Musk's erratic behavior that once created a huge fan base for Tesla has now diminished investor and consumer trust. Musk is known for setting high expectations and short time frames which are rarely met. Tesla famously unveiled their Cybertruck in 2019 and slated it for release in 2021, but the first customer deliveries actually went out in November of 2023. In general, the public perception towards lithium-ion powered EVs has soured in recent years due to negative reports on the ecological and social effects of mining lithium. Lithium mining is believed to pollute the soil and air around the mine. These miners are also believed to often be underpaid and working in unsafe conditions. This kind of press usually does not sit well with more progressive people, which in the US tend to be the majority of EV buyers. Bank of America projects that by 2026, Tesla's share of the US EV market will drop to 18%. This is a huge drop from their current 56% share and even further from their peak of 78%. This is largely due to the entry of traditional automakers into the EV market. Toyota tripled its EV sales from 2022 to 2023, and Ford almost doubled their February US sales from 2023 to 2024. In an effort to stay ahead of the competition, Tesla has had to slash the prices of its flagship models by almost 25%. A standard Model S has dropped from a price of $105,000 to just $75,000, while the standard Model 3 has gone from $47,000 to $39,000. These prices caused Tesla's revenue to increase by just 1% in Q4 of 2023, while increasing total vehicles sold by 35% throughout the year. One of Tesla's biggest innovations and selling points has been their autopilot technology. This comes as software add-ons when you purchase a vehicle. Enhanced Autopilot is currently listed for $6,000, while full self-driving will cost a buyer $12,000. In addition to the huge cost, Kelley Blue Book reports that only 12% of Americans are very trusting of self-driving technology. This has led to major pushback against these features being allowed on the road and has caused critics to scrutinize mistakes and accidents caused by self-driving vehicles. Tesla used to be able to call itself the largest EV seller in the world, but was surpassed in Q4 of 2023 by the manufacturer BYD. They sold 526,000 battery-only cars to Tesla's 484,000 in those 3 months. Companies like BYD have an edge over Tesla in international sales due to their base model Han car costing close to $29,000, a whole 25% or $10,000 cheaper than the base Tesla Model 3. All of this negativity can be clearly seen in the performance of Tesla's stock over the past 2 years. After reaching a peak valuation of $1.2 trillion in November of 2021, the stock has more than halved, and the company now sits at a market cap close to $540 million. The aforementioned issues are most likely to blame for this, but another huge reason is the company's CEO and largest shareholder, Elon Musk. In 2018, Musk received a compensation package that paid him no salary and no cash bonuses, but that was fully based on him receiving stock options as Tesla's market cap rose and hit certain goals. This means that Musk had serious personal motivation to increase Tesla's stock price as opposed to making the company better overall. He was able to leverage his fanboys and the quickly growing production to make Tesla the largest car manufacturer in the world by market cap. At its peak price in November 2021, Tesla traded at a PE ratio of over 210. For comparison, the Nasdaq, which is generally composed of more volatile tech stocks, usually trades at a PE ratio closer to the mid-20s. This made Tesla one of the most overvalued stocks on the market and put many investors at serious risk. Musk is known to make seriously questionable statements that affect the company's stock price. In 2018, he tweeted that he would take Tesla private when the stock hit $420, a 20% premium at the time. This resulted in a Securities and Exchange Commission lawsuit that ended up costing Musk and Tesla $20 million each. The greatest, most recent criticism Musk has garnered is over his acquisition and since management of Twitter, now called X. Musk bought the company in 2022 for $44 billion, which is thought to be double of what it's actually worth. In order to fund this purchase and continue running the profitless company, Musk sold close to $23 billion of Tesla stock in 2022. Understandably, this did not sit well with investors, many of which had a significant portion of their net worth in Tesla. They also were not happy about Musk splitting his CEO duties between Tesla and Twitter. It took almost a year for Musk to assign a new CEO for Twitter. Despite everything we've covered in this video, Tesla is still the world's largest car manufacturer by market cap. They also are continuing to sell more cars every year, but their stock price has declined close to 30% in 2024, while the Nasdaq has seen a gain of 10%. Have consumers and investors finally given up on the miracle-like growth of Tesla? Will the company be able to turn it around from here and win back market share? Let us know what you think in the comments down below. If you're interested in learning about how large companies like Tesla legally avoid paying billions in taxes, check out our latest video on that topic. Thanks for watching, and don't forget to like and subscribe for more videos just like this one.